So, ladies and gentlemen, this one is a very special panel discussion, and this is all about exploring the new shifts in real estate, finance, and funding. I'll repeat the topic of panel discussion for you all once again. This is about exploring the new shifts in real estate, finance, and funding. We have with us our moderator for the session. This is Mr. Shobhit Agarwal, Managing Director and CEO of Anarock Capital. As we all know, Mr. Shobhit is a visionary entrepreneur with professional excellence and experience over 20 years in real estate investments. At Anarock Capital, Mr. Shobhit steers the strategic direction through the various investment verticals. His in-depth knowledge about the sector and deep-rooted relationship with developers and capital providers have resulted in multi-billion-dollar deals as well. We'll also have our honorable speakers in alphabetical order as I introduce them. Today we have with us Mr. Abdul Kader Suriya, Chief Investment Officer at SWAMIH Fund, SBICAP Ventures. Mr. Abdul has close to 2 decades of rich work experience in various facets of real estate, alternative investments, strategic advisory, and investment banking. He's been a part of several full life cycle RE deals from investment appraisals to exit in his previous stints. He has been associated with marquee organizations like Morgan Stanley, ICICI Venture, and Brookfield as well. Today, ladies and gentlemen, we also have with us Mr. Anand Lakhotia, who's the MD and co-head Motilal Oswal's real estate private equity business. Mr. Anand Lakhotia joined Motilal Oswal Real Estate Fund way back in 2014 as the managing director and co-heads the Motilal Oswal's real estate private equity business, and he also oversees investments, divestments, and fundraising. Prior to joining Motilal Oswal Real Estate, he has worked with Yes Bank Limited and Centrum Capital Limited in their investment banking division as well. Today we also have with us Mr. Ashish Mehta, who is the director of Elegance Realty Private Limited and also the president of AREA Area Group. Mr. Ashish Mehta established Elegance Realty Private Limited in 2011, which is in the business of real estate marketing and investment portfolio for the last 13 years. It is a real estate and finance consulting firm offering wide range of services like closing for joint ventures, DM, and has taken various projects as sole mandates. Ashish ji is the president of Area Group and member of NAR India as well. Today we also have with us Binitha, Dalal, founder and managing partner at MT Kapital and head of fundraising Rustomjee Group with us. Binitha Dalalji oversees the fundraising and the development of the projects for the investee companies. She has over 17 years of experience working in the real estate, finance and development and fund management industry. And apart from that, ma'am is also currently managing is also the managing committee member at CREDI MCHI and the co-convener of the CREDI Youth Wing as well. We also have with us today Srinivasan, Gopalan, CEO, Arisinfra Solutions Limited as well. Srinivasan Gopalan has more than 25 years of experience, of which over 15 years is in the real estate sector itself. In his various roles as CEO, COO, and CFO of leading real estate developers in Bangalore and Mumbai, Mr. Srinivasan has been at the forefront of leading the real estate development business across all asset classes of residential, commercial, retail, and integrated townships as well. Ladies and gentlemen, can I please request you all to clap and appreciate the presence of our wonderful moderator and speakers for this very interesting panel discussion as I call them on stage, all of you together. Can I please have our respected speakers and moderator over here on stage, please, for this session. Thank you so much. Give it up for all of them, please, once again. Can I have some excitement over there at the back? Thank you. Thank you. Just a quick update. Ms. Binitha is going to be joining us, so I think we can start and begin. And, she will be joining midway. So thank you, and over to you. You have the timer display in front of you, and this is the presentation for this. Thank you, sir. Over to you.
Thank you for the wonderful warm welcome. Also on behalf of everybody, thank you for having us on the stage. We're going to spend next half an hour talking about what's happening on financing in real estate sector and what's causing this shift. So we'll break it into 2 or 3 interesting conversations. I have a script, but I also have a surprise that I'm not going to follow it, guys. So I'm out of syllabus questions, right? And you can phone a friend if you like. So I'm going to talk about what's happening in the market so that we understand it a little bit. Then what's happening on the financing side, and then what are really the changes that are coming about. So really just three very simple conversations to talk about. And to set the background, I think it's quite easy right now. I think real estate markets, volumes are up, prices are up, right? New project sales velocities are up. I was with a lot of developers, sort of talking and walking with them, and the measure of success has changed. Earlier, I used to meet developers and they used to measure their sales in quarters, saying 20% इस quarter में बेचना है, 20% इस quarter में बेचना है. Then quarter became months. अब they have become days. कि मेरा माल 10 दिन में बिक गया. I'm not happy. It should have got sold on day 1, day 2, day 3. So really, in that sense, the market is moving so fast, right? And at least I can speak for Srini and myself. We've been around for more than 20 years, maybe 25 years. We haven't seen this kind of teji, right? Everything is selling and everything is selling this fast. So my first question to you, let me start with Abdul. For many, many decades or years gone by, we used to sit like this only in panels. And मैं उससे पूछता था इतने सारे project stress में तुम क्या करोगे? Right? His mandate as government or semi-government office is to fund stressed project. I want to ask you, are you still seeing stressed projects to begin with? Are those left? Are there anything remaining which is still you categorize as stressed? It's on. Just talk. Yeah, take.
First of all, thanks to Realty Plus for having me here. As you put rightly, Shobhit, we have not seen this kind of teji in many years. Yes, we do handle a very difficult mandate of financing stress projects. And as you rightly mentioned, just like stock market touching all-time highs, we are seeing, most key markets in India touching, kind of decadal highs in terms of registrations of apartments, absorption, price. There's been a huge upswing or uptick and an increased momentum, particularly post-COVID, in all sectors in real estate, be it commercial, residential, warehouse. So, as we say, sheds, beds, meds, all are firing great guns. Now, with respect to your question on stress, yes, we over last 4 years have looked at thousands of proposals, more than 1,300, 1,400 proposals, and funded quite a bit of them. Interestingly, if you look at the data 4 years back, as far as residential is concerned, while on the surface, we may think that everything is going fine with respect to absorption and price growth. There's one interesting data point. 4 years back, the number of stalled units across India were around 4.3, 4.5 lakhs. And I believe Prop Equity has come up with another report 2 weeks back, which pegs this number at 5 lakh units. So that is to say that, and this is again, in markets like MMR, NCR, they've identified some other markets like Jaipur, Bhiwadi, and so on. So yes, stress does exist in pockets in residential, primarily because of, let's say, lack of demand drivers. In some cases, the projects continue to be stressed because of lack of fundamental viability. Because what has happened is these projects may have been sold historically. There have been legacy issues as far as customer litigations are concerned, delays are concerned. The price has been locked in, while the cost has gone up sharply post-COVID, with respect to material price inflation and so on. So yes, we do, while having solved the problem to a larger extent, or still we see a lot of stress in the market if you look at the overall number of stalled projects across India. So this Prop Equity report, I believe has mentioned, around 5 lakhs unit, 5 plus lakh units stalled across 2,000 projects pan India, which is quite a number.
I'm actually, I've seen the mention of that, but I thought it was over exaggerated. I thought this number was stale. But if you're saying that the stress is still as deep as it was 5 years ago, I just want to confirm that, because you'll see the flow of deals, right?
So it's not completely evident in terms of the flow of deals, Shobhit, simply because we are approaching the end of our commitment period in a couple of months from now. So the market is aware that we are not looking at fresh deals as of now. But yes, in our system, there are a lot of proposals which need this kind of flexible or solution capital, which we are not able to provide for want of capital now. So yes, the stress is there. Again, I'm not too sure about the number per se, 5 lakh units, which the agency has pinned down to. But yes, at least in our system, there are quite a few projects which still need resolution.
Thank you. I'll move to Anand now. So he looks at private equity. And I mentioned a lot of things saying volumes up, sales up. So how are you seeing the market, right? You've already invested in 2 funds or 3 funds maybe? 6th fund. So they've invested through 5 different funds. The 6th one is currently on. So how are you seeing the shift of market? Is it really shifted?
No, definitely, Shobhit, what we are seeing, what was there, let us say, pre-2020 versus today. And if it's a right combination of brand, execution track record, right product, right pricing, I think the kind of sales we are seeing on launch and subsequently, both on sales and both on pricing. So for example, projects which we invested, let us say 6 months, 9 months back, and the average of the project, whatever we assumed, the projects are getting launched at prices which are higher than the average what we assumed, which will come over next 3 years or 4 years or 5 years. So there is definitely a positive shift in the market. But yes, it is happening selectively where we are saying that the brand is good, it's a right product and etc., which I mentioned. So definitely the markets have changed substantially pre-2020 and now, and we expect this to continue. There are euphorias in certain pockets of India or certain cities of India, which we of course as an investing professional we are careful of. But largely if you are backing the right developer, right project and everything, I think the markets here are looking very, 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 very good.
Interesting. So you're saying that for good quality developers, the market is moving faster than the sort of branded or smaller developers. Ashish, I've met you very recently, and I thought for some reason that he's representing a developer community. He turns around and says, I do unsecured financing. And I was like shaken. I said, listen, this guy must be joking with me. But he has a very healthy book. Largely all Bombay, I'm assuming.
Only Bombay.
Only Bombay. And in many ways, I'm happy he's on the stage because he does represent a nature of money which was used in my view, pre-decadal eras. When I came into Bombay, HNIs used to fund these projects. So I'm really happy that you're here.
Thank you so much.
Tell me what's changed in your part of the world, right? Are you seeing people paying you 30% interest? They need money now in next 5 days. And how do you deal with all this, right?
So there are developers who require fund on a daily basis, and there are stretched developers who need funds and they are ready to pay the interest of 24, 28, 30, 36%. But we generally don't deal with these guys. The only reason is that the recovery of the fund, I mean getting back that fund of our HNI clients is very difficult. So usually fund to a developer are not very stressed, A grade or B grade, who require a time gap fund arrangement for their approvals or for the project which is initially taken. And interest rate varies between 15 to 18%. That is the rate of interest which generally goes in this kind of projects.
I'm really glad that even you've been able to organize this. I'll meet you separately on this one, but I'm sure a lot of people in the room would like to meet you. But I'm really happy. But do you see default even when you say I only fund reasonably good developers who are borrowing between 15 and 18? And I just want to ask you, what is the use of the fund? Is it to meet interest cost or pay the premiums to the government? I'm assuming it will be one of the two, but you can choose other options if you have.
So yes, there are default in extreme scenarios. It's not that there's no default. I mean, during COVID, so our interest paid is quarterly. So the time gap during COVID, the interest was paid after 9 months. So that was default, but that was default for everyone, and it was natural calamity. This generally payment which is taken by the developer, this short-term loan is only and only because of the approval cost, not for payment of interest or anything, because In city of Bombay, you know, the financial institution only fund once there is RERA, CC, after approvals. They need time gap arrangement, and that is where we come in picture.
I'm so glad that I've always been on panels with banks on them, and therefore we always keep talking about what they can do. I'm really happy that you are here to helping developers before they become bankable, funding their approval cost and other related costs. So I'm really glad I got to meet somebody today, so my conference is successful. Srini, moving over to you, I know, you know, he's a senior professional. I've seen him in many roles. He's been CFO, CEO, COO, and now he's got his own, he's moved on to his entrepreneurial journey, and he's also doing multiple things, including infra, fixing some old real estate projects. So how you seeing shift in markets in the last 2 years? Are you still getting a lot of knocks saying, I'm stuck, can you help me? Especially on completion of the projects.
Yeah, I agree with Abdul. There are still projects which are in pockets which are stressed. The good part is, earlier we never used to look at those projects because we don't know whether he'll be able to exit or not. The market has helped us to fund these guys so that we know the sales is good, the pricing is good, maal nikal jayega. Okay? So that is the difference between funding a stretched project somewhere in 2020 or it is now. And also we provide two kinds of things, Shobhit. One is to a developer, we take the developer along with us. It's very important, though an institution would have appointed us, we want to work with the developer because otherwise it's impossible to recover money from them. Kitna bhi surface hi ho, XYZ ho, you put all the loss together, the developer is still above them, right? So it's very important to take them along. So we work with them, find a solution. If you need money, we provide money. If you need material, we have our own platform, Arisinfra. We provide material from them. We take the mandate of sales. So we do the entire gamut of it. So providing only money is very dangerous to a developer is what I believe. So it's very important that you have the authority to sign the checkbooks as well and manage the escrow. So
sorry, Binitha,
that's what we do.
Binitha is representing developer. I wish there was somebody else. Abhi tak to we would have been having fun on the stage, right? So we take the advantage saying no serious developers on the stage. But moving to you, Binitha. No, you want to say something, Ashish?
At one point of time, also another part.
You guys were part. Yeah. Nice. So yeah, we've heard, you know, Srini. Binitha, again, you see a very, very wide sort of perspective, a very large developer, Rustomjee, and then also a very large and very successful fund now. How are you seeing shift in opportunities? Are you finding, first of all, personally, are you finding more fulfillment on the fund side or being on the developer side? Let's have that answer, and then we'll move to what's happening.
Everyone knows it. No, so I'll break down the parts of all of this. You know, firstly, thank you so much, Realty Plus, and all of you guys to have us here. And sorry I was late. When I look today at deals, okay, on just at the market today, I don't see as much as, I would say, stress, where I will say that a person cannot complete an asset. An asset which you can term to be an asset that can be completed is not a stressed asset. So I don't think perception-wise this asset is today stressed. That asset today is a bankable or a saleable asset is what I look at today's market. Stress is what existed when there was nobody to complete an asset and there was no demand to buy an apartment. I think from the day that I was part of this industry, I've realized one thing, that at a particular price, you will always find a buyer for a home or an occupant for a commercial asset. So we've reached that market today that for a price, assets are completable and are bankable. So I don't think it's stress. I think it is the market that is today supporting all kind of assets that existed in the fray. Now from developer to fund, we still are a development platform fund. So I probably think we wanted to create something different. So we made it a fund which comes with development capability. So today we are still part of that bandwagon and always will have that bandwagon there. I don't think my life has changed drastically between the development side or the fund side because of two reasons. A, I love real estate as a sector. I think this sector is the only sector which is leaving a mark on this face of this earth for generations to come. From the time that we've seen caves to the time that we are seeing homes and eventually homes on Mars, it is only architecture and real estate that creates it. So I love every part of this sector, and that's why I don't really see anything different, because I'm interested in everything that goes in. I look at today even what kind of construction tech we're using, what kind of processes we're using, who's my end user, how am I designing the project. So I still look at all of that and I don't find anything different. Fulfilling part of it, I think the role of having the ability to put money into a project and see it to the end is definitely more fulfilling than the other part of it, because I think everyone on the side has one joke that the only people who make money are funds, developers are only laborers on site.
But guys, just to sort of thanks for that, Binitha. But guys, this is the real shift, right? What Binitha really represents today, and as Mount K Capital, is the new form of finance. It's the developer who himself has set up a fund structure where he's aggregated the money under the AIF and he's taking up, I don't know what, 6 or 7 projects now. So, what, 7 projects?
Yeah.
7 projects. So this is an absolute sort of, let's just call the new series of fund management or investment management that's taking place in India. Binitha has done it, which is Rustomjee Developers. There's Purvankara. There are several other AIFs that have been applied. New form of capital, new way of working. And what Ashish is telling me is what we used to do, but it also continues. So it's not gone away. I wish it had gone away, but it hasn't. So he is taking care of things which are not bankable, right? Of course, he will also take part on what could be bankable. I'm sure he's doing that. But both these forms of capital is still available. Unfortunately, on the panel, there's no banker, or a developer today, but that doesn't matter. I'm going back to Abdul again. Abdul, we spoke about stressed, and in some sense, we all feel it's reduced, but let's acknowledge that it still continues to be around. But how are you seeing shift in financing? If you're at the end of your fund life and there's only limited pool left, where do these stressed developers go? Who else funds it? Because even earlier there was only SBICAPs that could do this, right? SWAMIH could do it, nobody else could do it.
So you're right. It's a dilemma in that sense for the industry and the developers. In projects which are, as Binitha mentioned, which can be completed and which can be banked. They should be banked and they should eventually get completed. The question is really who will provide financing and who will provide financing the way those projects need, in the sense that they need flexibility with respect to use, flexibility with respect to even the repayment terms, and most importantly the cost of capital. SWAMIH was one such scheme where, or rather is one such scheme where a concessional capital is really chasing the completion financing for these projects in the interest of consumers or home buyers at large. In absence of that, I'm afraid that, as far as opportunistic or private pools of capital is concerned, given the cost of capital or given the opportunistic return that they look at, financing stress projects in the way or manner SWAMIH does will not work. So it will perhaps need SWAMIH to come into picture.
To come into picture. But for sure, what things that you are rejecting, please give it to my friend here, Anand. Obviously he cannot take up stress, but not only stress. What is the new paradigm for you? Is there a shift in which you're in deploying Fund 6? How different it is from your previous strategies?
No, so the sixth fund what we launched, where we have raised close to 2,000 crores. The idea is to fund developers to meet their land stage requirements. So we come at a stage where there is need of capital and we fund developers to buy land. What are the changes what we have seen? One, the quantum of money required has gone up significantly. Two things have happened here. One, of course, the land prices have gone up significantly. The other thing which has happened is that because of consolidation and the market being dominated by top 7, 8, 10 developers, largely they want to do large projects. They are no more interested in doing a 2 lakh, 3 lakh square feet project. They are saying that if my effort of getting the clean title, approvals, etc. remains same, why not go for a 1 million, 1.5 million, 2 million square feet project? So there is a massive change where the amount of capital has gone up significantly. Of course, that these developers becoming large, market getting consolidated, their expectation on cost has gone down significantly. So there is always a gap between what is our expectation and at what rate developer wants to borrow. But at the same time, because there is very limited availability of this kind of capital, there is enough and more demand across India for this kind of capital. So today what we are seeing is that there are developers who there is large amount need for this kind of capital, and there is slowly and steadily what we have seen NBFCs also, they were doing it in some manner or the other, they have also stopped doing it. So the fund is the right way or the most ideal way for a developer to borrow. So that is what we are seeing in the market in last 3-4 years, amount of money going up, quantum going up, land prices going up.
Understood. So interesting, you are saying that cost of fund is going down for or at least expectation of the cost of fund for big developers going down, and they're not interested in subscale projects. My friend, my new friend is going to help.
Just to add, a lot of them are also averse to borrow at a fixed debt. They are okay to have flexible structures where it is a mixture of fixed and some equity. Nobody wants to do, or most of them don't want to do pure equity. If philosophy they want to do pure equity, that is fine, but most of them are averse to doing pure equity. They are saying, why should I share an upside with a fund when the markets are so good? So they want mixture of debt, which
hybrid structures.
So all those structures are there.
Yeah. So I was just coming back. He's saying he's only sort of chasing the big boys, leaves a large space for you. And I just want to ask, in your style of working and funding, how's RERA helping you, or is it a counterproductive thing? Because everything has to be disclosed, the projects have to disclose. So do you come in pre-RERA, or do you also fund projects after RERA has come in?
We fund in both the ways. We fund pre-RERA also, we fund post-RERA also. So when there is pre-RERA, because India में आपको पता है law के पहले जुगाड़ आ जाता है. So we try and come out with some solution where the hit of RERA is not considerable in either of the parties. So we do some kind of a tri-party agreement on different project, and then we secure our fund in such a fashion. Post-RERA is, of course, we do take allotment letters, we do stamp duty also on certain projects. There is very stressed developers. But I agree to him that there is a lot of shift in right now in terms of structure. There are developers who only go on pure financing. There are developers who go on finance plus an upside in the particular project of residential or a commercial. There are developers who also feel that we'll do equity sharing. There is no percentage, there is no upside, but whatever we both earn, we'll share it on an equal basis. So there are different structures where now developers are looking at rather than only a fixed interest rate.
Even in not so big developers, they are flexible in things.
They
like
are flexible
this.
with
They are
this.
flexible in things like that. Srini, I'm going to pull you up. I know most of these guys are all sort of answering Bombay. You do Bangalore as well.
Yeah.
What's happening in that market? That's a very IT-driven market, both in terms of office as well as in Resi. Is there a different trend? Because when I talk to banks, everybody sanctions a construction finance line, but nothing is getting drawn. Yeah. So how are banks going to deploy, or there's no pressure building on the banks?
First of all, I think everything is temporary here, right? We have seen these days in 2008, then we saw 2009, then we saw 11, 12, 13. In 2008, we used to say that, boss, mere yahan pe line lagi hai of people who want to fund me. 2009 में हम line लगा के खड़े थे वहाँ पे funds लेने के लिए. So I think some amount of semblance is required from both the fund side as well as the developer side. So I believe that land ki funding should be limited. Very, very important. JDAs are very important so that there is a the landowner and the developer are joined in the hips. Because one cannot just go scot-free taking the money away, right? And today if you see, just 4 years back, 2018 May, list the top 10 NBFCs, none of them are there today. NBFCs are almost a bank, the regulations are as good or as bad as a bank, so that's gone. So what is left is only AIFs, right? There is one AIF, then we have a platform called Giraffe where we do funding even for a 1 lakh rupees. I mean, those kind of funding are available. Then we have Ashish kind of funding, which is available, which was always there. The Shantilals and Kantilals were always there. They have actually protected this industry for more than 500, 600 years before the Shobhits came here, right?
Hopefully Jito was there and then all of that was there.
Correct. So Bangalore, if you see the pricing in the last 3 years has gone up by 50 to 60%. Extremely scary, right? The good part in Bangalore is end user market. The good part in Bangalore is many of them have got converted into plotted development. So the risk of construction is not there. Quick in, quick out is the mantra. And there you can take an amount of risk where you can even charge 20-24% where a developer can afford. You can't afford that in apartments. Because 3 saal ka 4 saal ho gaya to tumhara margin erode ho gaya. So important that we have this semblance, have a balance, try and do as much as possible joint developments wherever possible. Obviously Bombay is a completely different animal, right? So the biggest disadvantage of an AIF is does not have all the security measures that a bank has, right? All you can do is probably take them to an IBC, which again takes 1 year, 2 years, 3 years, and you're eroding value in my opinion. It's important that the government comes in, creates and gives them all the arms and ammunition to secure their investment. I think I would leave it at that because today there are more than 3,000 applications for AIFs, right? Everybody is an AIF. कोई खुद का AIF करता है, अभी नौ घर खरीदने के लिए भी AIF करेगा शायद, right? So it has become that kind of a situation where every developer after Rustomjee has succeeded in doing extremely well, people want to have their own fund for their own development. Important that we don't leave anything for think back maybe 2 years down the line, give them all the arms and ammunitions to control the developer and get the development out, because hum sab only if there is a cake we'll get to eat. So from that perspective, I think SWAMIH is a boon. No interest, nothing, but tremendous amount of control. PMC and AMC are going to be the mantra if you actually give them. Each of like them and like SWAMIH will now have a construction arm to ensure that I will complete this project, but I don't want to give this to you. That is what is going to keep changing if there is stress. One more point I want to make is, moving forward, we don't want these stressed assets, right? That is the reason today there is very less amount available for land buying. So 10 developers are gone. ये लोग तो खाली debt पे जी रहे थे. 110% debt, 10% take out, 100% for land. All those things are gone. So obviously things will improve. And I would not see this amount of stress which we had seen somewhere in 2018, 19, 20. COVID was a boon for developers, to be very honest.
So hopefully we'll create some new problems, not the old ones. So we are always creative people, so we'll do something. Binitha, just we have 2 minutes left. I'm going to ask you and end with you. Then if there are any questions from the people, will take that. You've actually done 2 things. One, you've taken your public company from private to public. So you've accessed public equity markets and you've raised an AIF, both very differently governed. What are the benefits, right? I mean, would you suggest people to go public, and would you prefer to stay unlisted and raise more SEBI type, AIF type money?
So, I think the answer lies in what is the aspiration of that organization. Where do they see themselves in the market today, and where do they see themselves 5 years down the line? I don't think someone who has the aspiration of doing standalone buildings, only one building, and doing like, say 2-3 lakh square feet a year, should go down the public markets route. I don't think that person should go that. That person should find him and take the unsecured money and continue making great profit on his assets. I think if you have an aspiration to be a company which is probably the pick of anyone who's looking at India, more from an investment, partnership and growth angle, then you please go ahead and make it a public company. If you have the aspiration of getting into larger assets like commercial, data centers, new age assets, co-working, please definitely become a listed company, because listing is not just access to money from the public markets. It's about structuring yourself and making yourself more transparent. I think for the longest as an industry, real estate has and CREDAI has been advocating that this sector needs to be more transparent. Listing only accelerates it. It brings more trust, it brings credibility, and it gets you to be world class. It's the biggest tick box for anyone who's looking for a partner in India. And it gives you the ability to be a company that can always have the ability to get capital at a drop of a call. The reason why we also build the AIF is not because that's a captive AIF for us. We're going to go into round 2 and we're going to go into different cities where we will partner with third-party developers. Because I think the one thing that funds didn't have an edge on is what to do when things go wrong. And this fund comes with the development capability, comes with the expertise, comes with monitoring and 30 years of legacy of building real estate. So tomorrow if a developer needs any support, this fund will be able to give it, including completing an asset when things go wrong. Plus, we've had the ability to see real estate across the country through CREDAI, and we really do know and have our ears on the ground of who does what in which part of the city. So this fund will delve on that and build it up and then build out on round 2, where it will also partner with third-party developers. So I think it's largely the aspiration of what that developer wants to be. If you want to be world-class, please list. It's a painful process, but the rewards are amazing. If you want to continue doing one building, only do residential, luxury, stay in a niche market, then please stay private and continue to build yourself, because listing comes with a lot of regulation and lot of, I would say, processes which you need to be prepared with.
Thank you. Somehow I get a feeling that you're going to list your fund management business by the time we meet next year. On that note, I can continue to grill these guys, but guys, quickly we can take 2 questions. As usual, we are running over time. Anybody has any interesting questions can raise his hand and ask. There's somebody in the front.
We have a bandwidth for 2 questions.
2 questions, and then you can catch these boys and girls outside in the common area.
See, there are a lot of regulatory hurdles in. There are a lot of regulatory hurdles in borrowing in EGB, external commercial borrowings. So, do you think that in the time to come, these will become a little more easier, so that we can go to Japan or to the markets which are more?
I think Binitha is quite eager to take that one, so yeah, let's go ahead with that.
Yeah, I'm used to working with the regulators a lot, so yeah. So with I think ECB is a rule or a regulation that even the finance ministry is still toying with. I don't think they are clear with what that regulation was built for and where it is getting used. Today the focus more so is largely on growth and basic structuring. So if you look at regulation across the last 5 years, right from RBI, SEBI, NHB has already had an overall change. ECB will come in due course of time, but today it doesn't seem like a priority. It's a great regulation, large townships, large scale development, ESG development, places where you're building infrastructure. It's a great regulation, but today the focus doesn't seem on that. It more so is still structuring banks, SEBI and AIFs, as well as NHB as a regulator.
Thank you, Binitha. One last question, guys. Anybody?
Yeah.
That gentleman, blue shirt.
Hello, good evening. I'm Ketan Thakkar. I just questions to anybody who can answer. The 2 source of funds now becoming very famous. One is the fractional investments. Company invest their money initially and then take the back money and sell through fractional investment of 25 lakh each and create and get back the money, the company who invests. Second is a REIT, real estate investment, money is coming. Which is the better one to go for it for investment point of view?
So I'll probably take that very quickly. Both these things that you've spoken about are more applicable to rental assets and office assets or warehousing if you want to add to that. Second, both of these are quite well governed now, one by RBI and one by SEBI. They are still forming some laws, but these are quite safe to invest today. Like I said, one layer of governance has already been set. It's been tested for about 3-4 years now. But both are very different. The REIT is very liquid because you can just at the press of a click sell and get out. The fractional ownership remains illiquid because it's not a listed entity. So I guess there are differences in both. We can chat more offline, but with that, I'll probably just like to thank our panelists. Guys, we had a very, very wonderful sort of panel and they were talking from their heart. So thank you all for having this open conversation. Thank you.
Thank you so much. Please give them a bigger round of applause, ladies and gentlemen. Thank you.